Late last week, we were doing a live session on YouTube, and we had a gentleman ask a very good question. And his question was this: Don, what else can there be in algorithmic trading, in statistical trading, beyond standard deviation and correlations? To which I said, well, the answer to that is infinite. There's a ton. And as an example, I want to show him and you, if you're listening, one of our algos. This, if you indulge me, these few minutes, it very well may change your life, your trading life. Our members, we have a few that would prefer me not show you this. By the way, I am Bagger Don at Stock Market Caddy. Today is Saturday, now 11:30 a.m. And you are looking at a daily chart of the S&P futures, the ES futures contract. And this chart is going back, let me show you, years. Going back to 2009. And if you notice, it has a data stream of 1, 2, and 3. The first data stream is the indice. The second data stream is the VIX, and the third data stream is the 10-year Treasury, the yield. Embedded in this chart are all three data streams, and there is an algo, a mathematical algo that is compressing that data and giving us a signal, a buy and sell signal on a daily basis. It doesn't mean that it's going to change from one day to the next. It might, not usually, but the signal comes in at the end of the day based on the close. There is nothing on the chart that I can see or point to. It is a mathematical algo, much beyond standard deviations or correlations. I suppose there's a correlation of sorts between the VIX, but it's mathematical, nothing I can point to. Now, what you might want to know is, when did we start using this? We developed the algo around the 2016-2017 timeframe. We backtested it all the way to 2000. From 2000 to 2009, it did not do well. From 2009 on to the point where we were in 2016-2017, it had done exceptionally well. Why might that be? Well, could be any number of reasons, including a Federal Reserve that is targeting interest rates and volatility in the market, or hedge funds. I don't really know, and I don't really care. What I'm most interested in, is it something that I can trade? Is it something I can shadow? Let me show you. I'm going to go to the Data Performance Report. And folks, this performance report is accurate because there are no profit targets, there are no stops. It's one way or the other. Of course, when you're running or trading or shadowing this algo, you're free to take your money. Let me bring into view the last 12 months on a running basis. It has netted, if you had been a member, even a monthly member, because you get to see this every night. The last 12 months, there have been 46 trades, 41.3% profitable, and you would have made $64,730. This year, for just the ES, $19,780. Now, it's possible you could have made more. This is assuming that you had placed one mini contract. You could have used more, made more. You could have used options and made more. You could have used micros and made a fraction of it. Or you could have just used it as a barometer as to what side of the market to be on. to help you time your dollar cost averaging maybe, or when to sell covered calls and that sort of thing. Let me show you the overall performance. This is over the last more than, 2009, a whole bunch of years. Now, we weren't trading it back in here. We've been trading it since 2016, 2017. What about the Dow? The same program. The last 12 months, 11,460. Just this year, 5,145. What about that crazy aunt in the basement, the NASDAQ? The last 12 months, 146,695. This year, 34,850. The Russell, the last 12 months, 12,300. This year, 4,455. And then the VIX itself, the last 12 months, 16,394. This year, 14,482. If you had taken every single trade over the last 12 months with one mini, yes, you would have realized $251,579. Could you have made more? Yes. This year alone, between January and today, May 24th, well, actually, it's in a big fat trade now, so it hasn't realized those profits. We'll show you in a moment. This year's bounty catch would have been, for you, $78,812. How is it positioned right now? Let me show you. And this is what our monthly members get to see every night, how Nicholas is positioned. The VIX went long on the 20th. Today, again, is the 24th. So the VIX went long on the 20th. On the 21st, all four markets went short. In just 4 days, there's an additional 10,182.50. I do not know when it's going to go long. We don't know. Nothing on the chart that I can point to. I can't even see it myself. It is a mathematical algorithm. So I hope I have answered that gentleman's question. The possibilities when you're trading algorithmically are infinite. There's so much more. It was a great question. Becoming aware of what you don't know is critical thinking. There's plenty that I do not know. That's what we love about these markets. We're constantly learning and learning from each other to help us do what? Manage our risk, extract cash flow from the money flow. I hope you will visit stockmarketcaddy.com. Send us your questions. Visit us and follow us for free on YouTube and on Twitter. But if you want these tools so that you can see them every night, you'd need to join as a monthly member. But if you want these tools on your desktop so that you can take action, maybe more timely, because see, there would be nothing wrong if you wanted to go ahead and bank your profits right now. We're not going to, but you might. And as an annual member, you get all of these tools, Swing Machine Plus, the Nicholas, and so much more on your desktop. But more valuable than any one program is the education on how to use the individual programs and how the markets work and how we like to trade them. From there, you get to develop your own approach. to managing risk and extracting the cash flow from the money flow. Hope to hear from you. You can call anytime. I can be reached at 813-758-8263. To the gentleman that asked the question, thank you. We hope to speak with you all soon. Good luck, everybody. Have a great Memorial Day weekend.